It is time for the many faces of relative strength. I have various questions for you about relative strength that I'm very curious to hear. I know that, Tom, you use relative strength a lot. And let's face it, Julius, RRGs are pretty much the picture of relative strength. That's what you're looking at. And Arthur, I know you have quite a few tools that you look at as well. So I'm going to start it off by asking you guys, how were you introduced to relative strength, if you remember? Did you think about it? And really, what tools do you typically use for relative strength? I'm going to start with Julius.
Okay, that question can easily go on for like 30 minutes, maybe an hour, but I'll try to keep it short. My introduction to relative strength is actually, well, looking back in hindsight, it's quite funny. Goes back when I was working as a buy-side analyst at Robeco, which is a big asset management firm in the Netherlands. And obviously, because you're a buy-side analyst, you don't have a P&L to show. So the management had figured out that all the analysts had a number of stocks that they were following, and you were tracked on your recommendations of those stocks. And then at the end of the year, they would look at what your results were, and that's where your pay for performance, they called it at the time. Right now, we'll call it a bonus, would be depending on. So it was in the early 90s. So, stocks were going up all over the place. And like good technical analysts, we were just putting buy signals on all the stocks because they were breaking out to the upside. Come the end of the year, and we had pretty much had a performance which was the index because we bought every stock on the screen. And that was when we thought, maybe we need to do something differently. And that's when we started to use relative strength to pick out the best of the best, as we called them at the time. And that's how I got introduced to relative strength. And then many years fast forward, at that time I had switched to the sell side in the institutional world, and I needed to present my relative strength ideas because all the PMs that I was talking to were only interested in relative strength, in a very condensed and grabbable version. And that's how RRG came to life, in short, because RRG enables me to show all the movements in the universe of a portfolio manager in one picture and explain to him and tell him and point out, this is where you should pay attention and this is where you should be careful. So that's how I got introduced. That's how I used it. It started out in individual stocks, moved on to sectors, and basically right now I'm using it for everything that I do, starting at asset allocation level, going down to stocks, individual sectors, individual stocks in a sector, et cetera, et cetera, et cetera.
Right. Well, of course, like I said, you're Mr. RRG, and relative rotation graphs, of course, relative in the name right there. So I know you're going to be talking a little bit more about your RRG graphs, but let's go ahead and Tom, what do you remember when you were introduced to relative strength, and what did you think of it, and what tools do you typically use?
I've been mostly self-taught, but I did read John Murphy's book on intermarket relationships. And that probably was where I got my first start. I mean, he really recommended using relative ratios. And so I started using them to help me analyze the overall market, the strength of the market. So I remember the first time I developed the XLY versus the XLP on a price relative chart. And I started noticing that, we would have big movements in the market to the upside when the relative strength of consumer discretionary stocks were outperforming the consumer staples. And so that was kind of the start where maybe a light went on for me that it's really important to see not only what your stock or your ETF or the overall market is doing, but really to begin looking at the relationships between different stocks, stocks within an industry group, an industry group versus a sector, sectors versus the overall market, and just kept zeroing in to try to find the best of the best. So that's really how it started for me. And the way I start my day a lot of the times is on my dashboard here. If you click over on the right side, this little gear shift, you can make sure that you have all these different panels set up. But I have these chart list panels checked. And what that does for me is I can look down and quickly visualize the relative strength of the sectors and the relative strength of the industry groups. And if one is moving, I have a general idea of how they're all performing. But if I see one in particular that I know I've been watching closely, and for instance, I'll give you the home construction group. Home construction I talked about yesterday was kind of teetering near its 20-week moving average. And I'll go ahead and add that down here so that you can see what I'm talking about. But today's strength is helping this group hold on to a very key level. So you're looking at it moving down here, but remember, this is a weekly number here. Today, it's actually higher. Yesterday, if we had looked at this, we would have seen a potential breakdown below the 20-week moving average. But today, we're back up above it because we're seeing that relative strength today. So for me, it's just a really quick way to get a sense of what's moving in the market. I tend to focus much more shorter term than a lot of the folks here at StockCharts and maybe many of our listeners and viewers. But I like to keep my finger right on the pulse of what's going on, and that's the way it helps me.
All right, Arthur, you've been nice and patiently waiting. When did you learn about it, and what tools do you typically like to use?
Well, like most of us, or a lot of us, I cut my teeth on technical analysis of the financial markets from John Murphy. And I use ratio charts a lot in the beginning. And what I found out was I was scrolling through a lot of charts. I like to look at candle glance charts in particular to see how the highs and lows are setting up. And what I found was I need to know, I always know where the S&P 500 is. So here on this chart, we've got the S&P 500, and I see, that there's a lower low there in June. June 3rd was a lower low. It moved sharply lower. So if I'm looking through any of my charts, be it an ETF or a stock, if it's making, say, a higher low, I know it's holding up a lot better than the market at that time. And then the S&P gets a new high there on June 21st. And anything that made a new high, say, before the S&P 500 is holding up or outperforming because it was able to make a new high. So it's what I call relative chart strength. And just to give you an example here, we've got the FinTech ETF, FINX, and it's been definitely one of the leaders. But if you look here, there's the lower low in the S&P 500. And I didn't even need the S&P 500 on this chart because I know that it made a lower low from May to June. And so when you look at your chart for the FinTech, you're like, well, wow, look at that, the May low. And it held that May low. It didn't have a lower low. So it held up a lot better during that market correction. And then you had a new high there in early June. So it was leading by hitting that new high earlier. So I always keep in mind what are the recent peaks and troughs in the S&P 500 and try to apply them to a certain chart I'm looking at. I don't even need to really see the S&P 500 because I think I look at it like 100 times a day. So I pretty much know what it's going to do. But here's iPay, the mobile payments ETF. It had a higher low from May to June, and it broke out well before the S&P 500 did a week or two. So that's how I've learned to come to use relative strength as far as relative chart strength is concerned and the price action on the chart.
All right, excellent. I really appreciate that answer from everybody. Okay, so relatively speaking, technology and, especially the semiconductors and software, I mean, we've seen them just clearly outperforming right now. Are there any sectors or industries that you guys are watching or where you're seeing some renewed relative strength that you can tell me about? And I'm going to start with Tom this time.
All right. Well, there's a couple of areas that I've talked about here on Market Watchers Live, and a couple of areas that I'm investing my own money. So, yeah, let me go ahead and show you what couple areas I think that look pretty good to me. I'm going to start again looking at the relative strength of the industry groups. I can tell you that, for instance, defense stocks had been underperforming from April. This is a relative chart of defense versus the S&P 500. And you can see the huge relative decline that we had back in late 2018, and then we tested it in April of 2019, put in that nice relative double bottom. And when you come back up and you clear above this this middle reaction relative high here, that kind of confirms that that bottom is in. And when we move back up through the 50-day moving average, you can see later the 50-week moving average. You can see the 20-week moving average also coming up and closing above that 50 and supporting relative price action as it pulls back. When you look at the PPO, and keep in mind, this is a relative PPO. It's not how the strong momentum is on the defense group. It's really about the relative strength of defense versus the S&P 500. And you can see with the strength this week, we're actually turning back up, and we are now hitting a new, fresh relative PPO high, one that we haven't seen in over a year, probably about 14 months or so. So I think defense stocks, and we've seen a ton of these companies coming out with strong earnings this quarter, here in the last couple of days, but for the most recent quarter end. And so I think defense stocks certainly are one of the areas that I would have a lot of focus on. When we go down and we look at the absolute chart, you can see that not only have we seen a move off of that December low to the upside, but we've also seen the breakout above the late September, early October high. We paused there at the beginning of July. I was waiting to see what would happen. And with the market pulling back today, we've got defense stocks breaking out and showing even further leadership here. And you can see that with this relative number here on the chart, breaking out above the June high. So I think defense is one of the key areas that I'm focusing on right now. As long as this relative strength stays intact, and by staying intact, I mean, it would be best to stay above a rising 20-week moving average. If you look back to 2016 through 2017 and into 2018, that's for the most part what defense did. And if we stretch this chart out, I'll go back several years, I think what you're going to find is that defense stocks tend to be very strong performers. And so what we went through in this relative weakness period was a little bit unusual. And now we're starting to strengthen again. So one way to take advantage of that is simply go back in to the scooters. And I went through this a little bit yesterday for those that watched the show. But if you go into the scooter reports, large cap stocks, type in defense, it'll quickly zero in on the best scooter movers. Northrop Grumman, which just reported great results. Lockheed Martin reported great results, gapped up, then traded lower and has come roaring back. If we could go to some of the mid cap and small cap, not so much mid cap because they don't get traded very often. But here on the small cap, there's that Kratos defense I mentioned earlier, 96 scooter rating, stock breaking out to a new high today. That's how I use relative strength. That's a group that I really favor right now. And those were a couple names that I like.
Excellent. It's kind of funny because when I was doing my scan for our chart breakouts, Kratos was one that came up on my scan. So interesting to see it show up as one of the highest scooters in that particular industry. All right, Julius, how about you? Now I know we're going to likely look at a relative rotation graph. So what is interesting to you on those graphs?
Of course, you will look at a relative rotation graph. I don't know anything else. Well, we were discussing before the show to show how I would pick some maybe early movers and early stage stocks or sectors that could be of interest in the next move higher, if it's going to happen. So the starting point here is a relative rotation graph of US sectors, and this is a weekly RRG. That's where I mostly start. And technology rotating back up. I wrote my Don't Ignore This Chart blog today on XLK and rotating back up. That's super bullish. So if you want to read about that, go to the DITC blog. But for the more gutsy, ballsy moves, then there is something else that I'm looking at. And on this weekly chart, I'm looking at industrials inside the lagging quadrant, which have just started to turn up, and materials inside the improving quadrant, because they're at a very nice RRG heading and they're very close to breaking into the leading quadrant. So the next step that I would do, by the way, discretionary here is making a nice turn as well. To make it a little bit more granular, if I move to a daily version of that RRG, and then see where my materials and my industrials are, you will find that materials is also in the improving quadrant on the daily, and industrials is inside improving and rapidly closing in on moving into the leading quadrant. So these two sectors I'm going to be keeping a very good eye on in coming days and coming weeks. Now, to find interesting stocks inside those two sectors, all our subscribers will have access to these predefined groups. And the members of the XLB, of the materials sector, are predefined. If you load up the RRG, you will get the weekly. Easily switch that to daily, and you'll be able to find or browse through all the individual stocks that make up the materials sector. Now, what I often do is break my screen in two, and every time I am on Market Watchers Live, I get the question, how do you do that? How do you break your screen in two like this? So you have your RRG on one side and your chart on the other side. And the way you do it, it's actually a Windows feature. So you do, or probably the Mac also has it. It's the Windows key and then the left arrow or the right arrow, and it jumps your browser window to the left or to the right, and it gives you a perfectly located two screens that you can work on side by side. Now, what I do is another trick here is I select a line, and then again with the control key and the arrow up and down, I can browse through a number of these stocks. And then what I do is I'm going to look at them. This Dow is too far ahead. I don't like that. This one too. This one I like because it rotates from weakening into leading. So what I then do is I bring that stock to my regular sharp chart, type in EMN, and I can analyze that stock. And I have this RRG shows you the relative versus the materials sector. This chart shows you the relative versus SPY. So they could be a little bit different, but I like to have the other perspective as well. And if I look at this chart, I just love it. It broke out to new highs. It's now testing that former resistance level as support. That's all good. Relative strength is breaking above its previous high, and we have the RS ratio line just shaving off that 100 level on SPY, and it's doing even better versus the materials index. So EMN, Eastman Chemical, is one of the stocks that I would keep my eye on as a future leader when materials starts to really pick up. And we can just carry on this exercise. Look at CF Industries, looks good as well. So you go there, and then you have, what I like is have the big picture here on my left where I see everything zooming in on CF, and here I have the price chart with, in my case, it's the ratio line and my RRG lines. But I can imagine that any one of you have their own sort of workflow, preferred workflow, what you do, what you like. Maybe you work with an RSI or scooters or PMO, PPO, whatever there is. It doesn't matter. You can still have your RRG on one side and the chart setup that you like on the right-hand side, and make the comparison between the two. Again, here, CF breaking to new highs. Our RS line needs to break higher against SPY, but it's very close. And the RRG lines looks like discounting that break, that it's going to happen there. Go further and maybe find something a little bit more esoteric, like here, this one, MOS. So go to MOS, look at that one. And then you have a stock that is not as strong as the ones that we've seen. That's very easy because it was in lagging and it's now picking up. So this is a little bit more gutsy. The relative strength seems to be improving, but we need price to actually take out this resistance here at 25 roughly. But this is the way that I use RRG in combination with a chart setup. This is my chart setup. You can use anything you like to keep an eye on the big picture, pick out the icings on the cake, the good stuff inside the sectors, and then bring it to my final decision on the price chart, because that's always where I make my final decision.
Oh, absolutely. I have to agree with you on that. Yeah, the relative rotation graphs, it's just great because it's just so visual, and it just, I don't know, for me, it really brings it all home as far as, how well these sectors are doing, and the fact that we have it in such a way that you can, change your benchmark and find the sectors and go from there as well. So, all right, Arthur, you've been kind of quiet because I haven't called on you in a while. So repeating the question, are there any areas, industries that are interesting to you right now, maybe seeing some improvement?
Yes, I'm going to highlight three, and one of them is in Tom's area. It's defense, but I'm going to start with ITB. And I mentioned in the beginning that I like to compare the peaks and the troughs. Well, that often works, say, when the S&P 500 has moved down and you see that your stock or ETF has held up relatively well. But with the S&P 500 at a new high, we need to probably use some other techniques to find some potential relative strength movers. And I'm going to show these charts with the price relative and then also with the RRG indicator, which is based on the price relative. And if anybody doesn't know RRG, it's fine. Just kidding. Julius just talked about it. So what we have here is ITB. And so I'm going to combine it with the price. And first on the price chart, it's doing just fine. It's in an uptrend overall. And it looks like we have an ascending triangle brewing. So that's a bullish continuation pattern. You have a higher low here. With the bounce, we have another higher low. So that means the lows are getting higher and buying pressure is coming in. And then you have the supply line or resistance there. And if you break out there, that signals a continuation higher. And if you look at the indicator window, you can see the price relative turned up over the last 2 days. And home builders, they were leading in April and May and into June, but took a hit in June and a little bit in July. And I'm watching for a breakout on the price relative. Now, the indicator window there shows the RRG indicators, and the green one is momentum. And as you know, with basic technical analysis, momentum often leads price. So you get an upturn in momentum before you get an actual upturn in price. And so the momentum indicator for RRG is positive, or it's above 100. And so that means it's turned up. And you can see the relative line, the RS ratio line, is still below 100. It needs to get above 100 to actually show relative strength again. And if we get a breakout here, I think that'll happen.
All
now,
right.
the other one we have here is General Dynamics. And it comes from the defense group that Tom was looking at. And if you look at the price relative, we'll put a line on this, but there's a breakout. All right, that's a multi-month high in the price relative. So that tells you we're outperforming. And then if you look at the RRG indicators, the RS ratio indicator has been above 100 since June. So that shows relative strength. That reflects this upturn and breakout in the price relative. And the momentum indicator is kind of going below 100, above, below, but it's back above 100. So that's positive. So this looks like a relative breakout. And then you have to combine it back with the price chart and see, well, what am I looking for on this price chart as far as something that's actionable? And we can see here that we have a resistance turn support zone. I'm going to go ahead and take a little liberty and just ignore this big spike up here. But I think there's kind of a resistance zone here that's turning into support. And maybe if we get a little pullback here to that 180 area, it might be an opportunity to partake in something that is showing new relative strength and could be a leader in the coming months. And then the other one is Goldman Sachs. And John Murphy has highlighted Goldman Sachs in his commentaries of late. And we've got some similar things happening here. There you can see the RS ratio is positive, and you can see the RS momentum indicator is positive. So that means the RRG is in the leading quadrant here. And you can see that the ratio chart, we've had a breakout above that prior high. See those highs from the spring? So we're getting a relative breakout. And then if you look at the price chart here, again, just like General Dynamics, you can see we have kind of a resistance zone that turns into support, and maybe this gap too. But if you get a pullback, say, to this 205 area, that might be the opportunity to get on the bandwagon here for Goldman Sachs. But part of this exercise is to put things on your watch list and then watch them and be patient and let them come to you with the setup that you like.
Absolutely. Okay, we're running a little low on time here, but
Are we yakking away?
yeah, we really should go ahead and get to this last question, because I know our viewers and readers, they're always interested in learning how to scan for relative strength. So are there any scans that you use to define relative strength?
Okay, I've got the screen, so I'll just continue on.
Sure.
I was just setting up RSI here. I do use the RSI as a screen, and I've got the S&P 500 value here at 56.61, and it's a 65-day RSI, which is basically 3 months. And so I've got a little scan code, and I'm going to have to change that number. So if I want stocks that are outperforming based on that indicator, you could use rate of change as well. You could use the PPO, you could use the PMO. You set the value for the S&P 500, and then in your scan, you make sure that the indicator is above that value. So I want RSI to be above 56.61, want the close to be above the 200-day because I want an uptrend, and then just check your syntax, of course, to make sure it is correct. And so I've got my baseline in there, and all my results will have an indicator value of RSI that is greater than that of the S&P 500. And you can do another sort if you want by clicking that scooter column. So I can get the strongest scooters at the top. And I would usually put these in a chart list. So I would just replace an existing chart list. And we'll do this scan dump 3. And I'll click OK. And then I can look at these individual charts to see if I want to go further with any of them.
That's excellent. Julius, do you have any scans you like to use for relative strength?
Yes, I do. For me personally, the most asked question is from users is how they can scan for RRG values. I'm sure it will be there at some stage. But for now, me personally, I have flipped the process around. And I just looked up this article. It's about a little bit more than a year ago since I wrote about how to combine relative rotation graphs and the turtle soup setup. Well, I'm not going to explain that whole setup. You can look at the article and find it. The scan is even in there. But what I do is I run that scan, and it's here in my most popular scans. And then I get my list. And that list, I will then throw at an RRG. So if I run that scan, here you go. There it is. I say replace that list, and I replace the turtle soup by. By the way, it's looking at the S&P 500 stocks, and then it's got these stocks in there, and I can view that list as an RRG. And there you go. You got the picture. And these stocks fulfill the criteria of a turtle soup setup, which is basically a trend reversal signal. And I can now put these stocks that are putting in a trend reversal signal on the low side on an RRG, and immediately, like Amgen and Duke Energy stand out as being very positive, together maybe with Caterpillar. The scan is on a daily basis, so it makes sense to look at the RRG on a daily basis. You look at that. A little bit of a different story here. But now I can see that still Amgen is pretty good, Duke is not that good, and Caterpillar looks very good. Why are they that? Because they're pointing in the right direction, and especially Cat is over there. And then I'm going to do my same trick as I did earlier on. I have that RRG, and I'm going to inspect the chart of Amgen. Again, on a daily basis, and you see that turtle soup is testing for these lows. So this is resting at its previous support at a support level. Relative strength is testing support, and you see that the RS momentum line has slowly started to crawl up, while RS ratio is leveling off. So it's finding the they say the nicest flowers are on the edge. So you're on the edge. If this breaks, it's not good. But if it holds, you're very early in the game. Caterpillar probably a little bit different because it looks to be a little bit more ahead of the game, but we can check that. So here you got Caterpillar. It looked as if it was breaking lower yesterday, but it reverted back to that. So that's a positive thing. And that positive is carrying on today. And you see that that RS ratio level is leveling off. Momentum is picking up. It seems to be, holding above this support level. Again, a little bit gutsy, picking up at low prices. But, if you want to be a profitable trader, that's where you probably put in your buys and not like chasing things higher. So this is how I combine scanning with my relative take using RRG.
Excellent. And Tom, I'm going to finish with you. How do you use scans for relative strength?
All right. Well, first I've pulled up a chart here. I mentioned the XLI was on the verge of possibly breaking out. You can see this is a 2-year daily chart. So you've got the industrials trying to make a breakout to catch up with technology and consumer discretionary, which have already broken out. And so if I just focused on this group and I go back to, to highlight some areas here in the industries within the XLI, we talked about defense, so I won't talk about that one again. But I think it was in, let me see if I can quickly find it here on my list. It's the building materials group. When you pull this up on a relative basis, you can see that it had been downtrending for a couple of years. Now it's uptrending, just bounced off that rising 20-day moving average. So if industrials break out, this is a group that's been leading this area. So what I would do in a technical scan is simply go in. I changed, this was a default scan, which showed volume 40,000 shares. I increased that to 200,000. I want stocks that trade at least 200,000 shares a day. The group is building materials and fixtures, and you can get that down here under the sectors and industry groups. So I simply go down to the industrials, and I could put whatever industry group in here that I wanted, but I know building materials has been strong of late, so that's where I added it. I just simply clicked on that, added it here, and then it pops up. Then the last thing I did was I added the scooter, because that is a relative strength tool, and you can find the scooters. Where did I just,
Yeah,
it wasn't there, right there. So you've got the scooter here. You click on that, you add that, and that's where this comes up. I think that comes up with a default of 90. I changed it to 80, and then I hit my run scan button, and my scan results come up, and there are 15 stocks that meet that criteria. Now, some of these are may not be enough volume. You can see some of them have traded less than 100,000, even though they met that criteria of 200,000 average. So that might be one way to sort them, make sure you're getting a liquid stock. The other thing, though, is to simply use the scooter and start right at the very top and go down these charts to find a stock that meets your criteria. Because if industrials break out and the building material stocks continue to lead, I want to have leaders in this space. So this is a way you can zero in using the scanning engine to find relative strength within a group.
That is excellent. You guys, this has been absolutely wonderful for our Relative Strength Week. I think that having this panel, giving you the many faces of our relative strength. So I really appreciate, especially Julius, Arthur, thank you so much for participating in this from all the way across
Nice shirt,
the world.
Julius and Tom. Very nice shirt.
I know somebody did mention in the chat room how you all are color coordinated. I don't have the blue polo shirt in my closet, so
we got to get you one.
Play along, but being the moderator, I think I had to be a little different anyway. All right, excellent. Well, we'll say a goodbye.